I am so not ready. I'm so sorry. I got distracted and I got delayed, and I'm really apologize to all of you who have been waiting for almost 7 minutes late. I'm so sorry. Genuinely, that's deeply disrespectful of me to those of you who've been waiting on time. The truth is, I was about to start without a cup of tea and I couldn't do it. I had to go make one. Welcome everyone, 5 Fact Friday. I'm Charlie Lamdin. This is Moving Home with Charlie, where I share my insights and advice and guidance from 25 years behind the scenes of the estate agency industry as a supplier of software, marketing services and consultancy to estate agents of all sizes, large and small, big corporations, one-man bands. And I am here to help make moving house easier for everyone involved, which is buyers, sellers and agents and tenants and landlords, of course. And I don't spend nearly enough time talking about tenants and landlords. 5 Fact Friday is the weekly video I do where we go through the 5 most significant newly reported pieces of information that you can check for yourself that I think have the biggest impact on the housing market. Now, nothing has an overnight effect on the housing market. It moves like an oil tanker. So, every week there's new stuff. What happens in the housing market? Not much. And of course, what we're all trying to do is work out what's really happening, because there's absolutely no transparency in the housing market. Which brings me nicely on to my point about transparency being the objective that I have to bring to the housing market with my company and my website, Best Agent. Oh my God. If it looks like an amateur shit show, it's because it is. But hopefully not for much longer. Hopefully not for much longer. This is the life of a bootstrapper, right? It's one thing running businesses and startups with investors, because although you have all the problems that come with investors, you do at least have some money for them. But we're doing this all without investors, and bootstrapping it is actually easier, but also a bit more chaotic sometimes, to be truth be told. Now, for those of you who don't have time to listen to my endless rambles, let me quickly whistle through the 5 facts of the week. So, mortgage approvals, officially registered by the Bank of England, mortgage approvals for March rose from February. And I will, when I get into going through them, I'll break it down a little bit, but they did rise. I want to talk about the significance of that. Nationwide house price index showed that prices fell month on month for the second month. Bank of England net lending is a figure that never really gets reported or talked about, but I think is very, very important to show the underlying trend of what's happening with the finances in the housing market. There is an article out from the New Statesman talking about how they see that house prices are going into a long-term decay trend, which we will cover. That's using inflation-adjusted house prices from the land industry. Which magazine has said that EPCs are often wrong. Now, as someone who was at the coalface of providing EPCs, energy performance certificates, to estate agents as part of my photography and floor planning service that I used to provide in London, I know a bit about the provision of EPCs, and most of them are wrong. Right? If you can see how quickly they get done and more importantly, when you get a floor plan done with an EPC, if it's not done properly, it can lead to major problems to the house value. And one more bonus fact about probate delays rising, which in a falling market is an absolute cocking nightmare for people who need to sell a probate property. All right, in the falling nightmare, a falling nightmare. You ever have one of those? A nightmare when you're falling in your nightmare and you think, and then you wake up before you hit the button. Anyway, right. Those are the 5/6 facts I'm going to be going through. I'm going to start with a comment I got on a YouTube video that a comment came in yesterday. And I want to just quickly touch on this because this single comment touches on so many points about what's happening in the property market right now. I think it's worth going through. So this is a comment from someone called Julie Poole on YouTube. Hi, Charlie. I agreed to buy a house that 3 agents valued at £350,000 5 months ago. I bought it 2 weeks ago for £330,000, which I am happy with. Put a pin in that, we're going to come back to that. Mortgage valuation yesterday, at 300,000. My broker tells me that every valuation in this week from every lender, including main high street lenders, is coming in at between £15,000 to £30,000 under agreed sale price. Now, I want to stick a pin in that because that broker is making stuff up. Even if generally speaking it's right, but we'll come back to this, right? The property was £280,000 new 5 years ago and is immaculate. I am told there is a big risk to appeal as it could go down even more. Crazy. Julie, if you're watching this, I actually think that what's crazy about this is that you want to pay 10% more than your bank thinks the house is worth. But I'm going to go through 5 facts first, and at the end of 5 Fact Friday, we're going to come back and I'm going to unpick this because there is so much that comes out of that comment. There is so much that I think we have value to everybody. But without further ado, let's get on to the 5 facts of the day. Here we have got mortgage lending statistics. Net mortgage approvals, and this is seasonally adjusted, right? Net mortgage approvals for house purchases rose from 60,000 in February to 61,300. So they rose about 800, just over 10%. Now the long-term average is in the 70-something thousand. So this is definitely getting healthier. All the headlines are like, oh, everyone's buying again. No. This is still significantly below long-term averages. There is also a seasonal bump. And when you factor in the actual time lag of what's happening in real life, what we're seeing here is the reflection or the wave you would expect from the definite bounce in buyer activity that all agents were reporting in January. Because buyer activity means I'm inquiring about a house. I want to start viewing. I'm going to start viewing. I'm going to view a few houses. Oh, I'm going to make an offer. Oh, I haven't got a mortgage. Oh, I'm going to apply for a mortgage. Oh, let's get my mortgage approval. Right, well, that's March. So that's about 2 months. So what we're seeing there is the bump in mortgage approvals that was reported as a bump in buyer activity back in January, roughly speaking. That's my interpretation of it anyway. And that's for March. We're now in May. So what you mustn't do is think that because the Bank of England is reporting a rise in mortgage approvals in March, which is a reflection of January's activity, that does not mean that today in May everyone's buying again. Now, one of my followers on X, which by the way is where I post every single day. So if you want to get more, I know I've been doing fewer videos recently. Good reasons for that. Sorry, I wish I could do more. I really do. There's so much to be busy about. But I do post regularly every day on X. So if you'd like to hear more from me and keep an eye on everything I'm saying about all matters to do with housing, follow me on x.com/moving_Charlie. Julius, someone who I butt heads with quite often on Twitter. We agree on some stuff, not on others. He saw this Bank of England data and went, "Oh, everyone's buying again," as if that's what's happening now. No, this is, I think, a blip in because what happened in January? Do you remember mortgage rates were quite low in January, and I remember saying to my followers in January, I don't think they're going to go down anymore. If I were you, I'd be hurrying up and getting your mortgage offer secured now, quickly. I was encouraging people to secure a mortgage offer and go out and buy in January because I feared mortgage rates were going to rise, as they have. Mortgage rates have risen since January. Very, very small amounts, but very, very steadily. They're creeping up. They continue to creep up this week. And I fear, based on the swap rates that have been increasing this week as well, they're going to continue to increase. And I think the more that they increase, the more that's going to choke off that little bit of bounce and activity that we saw in January. in terms of buyer activity that's translated into. So we'll see some transactions. I mean, the most complicated thing about the housing market is the timing effect, the time lag effect. So yes, there is an improvement. And then let's look at the wider graph on this, because it is useful. And what I would acknowledge here, and if you looking at that blue, if you draw a line from that, I can't do it on my screen, sorry. The trend line was down, and it has broken up out of that down trend line from the pandemic. I mean, it's a bit of a weird spike because it was down and then up, but if you ignore that top spike and just look at this one, it's still continuing a downward trend. And I think this is a bit of an upward blip in an overall downward trend. I think that's pretty incontrovertible, although many of you will disagree, of course, because lots of you do disagree with me all the time. So that's fact number one. Come on, John, you're going to be here all bloody day if you take this long for each fact. Fact number two. April sees slowing in annual house price growth, and UK house prices fell. I wish they'd reword this. I really wish they would reword this. It's not that UK house prices fell. It's that the average, or they call it an average, but the hedonically regressed, the calculated single figure that Nationwide puts out to reflect the overall values on their lending book came down. And it doesn't matter whether these guys are going up or down. I just don't think they're very helpful. It covers the whole of the UK, and you've got Scotland and Northern Ireland going up, England and Wales going down, and they've got one figure to represent all those four countries. Just doesn't make any sense. Anyway, this hit the headlines, and lots of headlines. Oh, house prices fall for the second month in a row. The bump is over, and house prices coming down again. Yeah, maybe. I mean, I've always talked about the long-term trend, and you know what I think about the long-term trend, and we're going to come on to the long-term trend in one of the next points. Now, what was interesting, and by the way, sorry guys, I just need to publish. Forgive me, this is really important. I need to actually publish the link below so that you can actually look at all of these facts, very importantly. This is what I mean by an amateur shit show, right? Here I am live, published. Right, the link below is now live with links to all of these sources, because I recommend everyone does go and look at the Nationwide average house price report, the house price index for April, because in there they have got these interesting surveys. Main reasons. So let's just read it. It's worth going through. House prices fell 0.4% in April. Oh, this is the chief economist. After taking account of seasonal effects, this resulted in a slowing in the annual rate of house price growth from the previous month. The slowdown likely reflects ongoing affordability pressures. You don't say. With longer-term interest rates rising in recent months. Yes, longer-term interest rates, they're talking about swap rates, which means mortgage rates going up. Reversing the steep fall seen around the turn of the year. That's when remember mortgage came down? House prices are now around 4% below the all-time highs recorded in the summer of 22. Summer of 22, when I was calling the top, remember everybody? And everyone went, no, house prices cannot do anything except go all the way to the moon without stopping. Now, it's interesting that they think 4% below the all-time highs, and that's, again, the average of all four countries. I wonder what that figure would be if they broke it down for Scotland, Northern Ireland, England, and Wales. And again, even in England, the overall average massively masks major regional fluctuations. And that's why I think it's an unhelpful number. Cost of living pressures and higher rates hold back would-be first-time buyers. God, that would be a reason that people would buy houses. It's almost as if someone was saying this in 2022, that the cost of living pressures and higher rates would hold back first-time buyers. Recent research carried out by Centreswide on behalf of Nationwide found that nearly half of prospective first-time buyers have delayed their plans over the past year. Not because of me. I said buy now if you can afford it. Among this group, the most commonly cited reason for delaying the purchase is that house prices are too high. It is also notable that 41% said that higher mortgage costs were preventing them from buying. Now, the really important point about that is that when you talk about supply and demand, but Charlie, it's just supply and demand, right? There are buyers who want to buy being prevented from buying. So they can't buy. So that hits demand, even though they want to buy. So is that demand? The demand from someone who wants to buy but can't is ineffectual demand, and it's irrelevant demand. And demand, insofar as the supply and demand equation of house prices is concerned, is only demand from funded buyers who can afford to make offers that get accepted. Okay, this is why I've gone all along. People go, oh, there are more people. If there are more people, house prices go up. No, the people have to have money. And if they don't have money, they can't buy houses. It is not the truth that more people equals higher house prices. It's just not that simple. It might be truer in the rental market, but in the sales market, it's not that simple. So house prices are too high. Number one reason, house prices are too high. Hey, agents, is it worth overvaluing to get business if you can't sell the houses because they're priced too high? Meaning that you earn nothing because overvaluing is killing transactions. And here you have black and white, yellow and white proof that you are losing out on transactions because house prices are too high. So answer me this, riddle me this, house price puffers of the UK. Is it going to make you more money to talk house prices up? Or is it going to make you less money to talk house prices up if it means it leads to lower transactions? Yes, Mr. and Mrs. Smith, we can definitely get you 50 grand more than I know it's actually worth, but I'm going to say that to get your business, and then you won't sell with me, and this is all a massive waste of everyone's time. Overvaluing is self-harm. It's financial self-harm to talk prices up. If prices are going up, then yes, report them going up. Fine. You will see. I will be right. You will see. House prices are too high. Mortgage costs are now higher. Cannot afford extra costs involved in buying. Cannot pull together sufficient deposit. Cannot borrow enough. 5 different ways of saying I can't afford to buy a home. Right, I'm going to stop and go to the next point. But there you are, guys. Go and have a read of that, because here we are. Compromise. This is also interesting, this next graph. Compromises that buyers think they will need to make in order to buy a first home. Less expensive area, smaller property that needs work doing, fewer bedrooms, buy a flat and not a house. That's really depressing, isn't it? People want to start a family. Anyway, we'll come on to that another time. Next, so that was fact number. We're only on number 2. Oh dear, Charlie, come on, speed it up. Speed it up. Speed it up. Net lending. So I'm gone straight to the actual hardcore data here. Now, this is a graph of net lending. So that is all new lending minus mortgages that have been paid off. And here's a graph which shows each month whether or not the overall amount that's currently lent on properties is going up or down, and by how much it's going up. And this is in, I think this is in billions or 5,000 million, right? So all this means, whenever it's above that line of 0, let me just double check. Can you see that? Yeah, you can. Whenever it's above that line 0, the total amount being borrowed is increasing. And you'd expect that to happen as house prices are increasing, as inflation is increasing, right? And then it goes all zigzaggy wonky in over COVID. And then look what happens. The net lending at the beginning of last year turned negative. And it's kind of popped up and down a bit, down. That's quite steeply negative. But it is trending negative. And the overall net lending figure has turned negative for the first time since records began. And that's close to 0, but this is way, way below the previous average, which was, well above that 0 line. Okay. Now, the way that I think about net lending as far as house prices are concerned is a bit like, have you ever seen one of those bouncy castles where at the side of the bouncy castle they have a generator blowing air into the bouncy castle? If the bouncy castle's buoyancy, that's one of my least favorite words to describe the housing market. If a bouncy castle's buoyancy is created by that thing blowing air into it all the time, that thing is now, it's not, when net lending is negative, that inflationary effect is going to go negative overall across the housing market, because people mostly need to borrow money to buy houses, and if fewer people are borrowing it or they're paying it down more, there's less overall. This is unscientific. This is not data backed. This is just purely my gut feel. Okay, there are plenty of people who actually could show you the mathematical correlation between net lending and the long-term effect on house prices, but there are big long-term delays, because this is also people paying down mortgages because interest rates got so high. They've got savings, and it doesn't make any sense to keep savings in the bank if your mortgage interest is higher than your savings rate. So people are paying it down. But that's also taking money out of people's savings, money out of people's pockets, money out of the economy, and overall it feeds the house price decay doom loop, I think. And that's why I thought it was important to point that fact out this week. That's fact number 3. Fact number 4. This is an article in the New Statesman. It's just sometimes I'm sitting here in total silence and I've got no idea what's going on in the comments. Hi, everybody. Thank you very much for being here. And it's always good fun to know I'm talking to a live audience of 500 people. Now, this is an article in the New Statesman, and it's a really interesting article I suggest you all read, because as all of you who've been watching my channel for a long time will know, I've always said house prices don't crash. I've never said there's going to be a crash. I said that the whole house moving process and the transaction process is so slow, it's always a slide. And yes, it can slide at different gradients, but it's always a slide. And just read the article for yourself. In a nutshell, the real value of homes in the UK has dropped significantly, and long-term decay in value appears to be setting in. Do you remember last year when I said the UK property party, the 40-year property party is over? This is what I was talking about, right? Long-term real house price growth is gone. It's gone. House prices always go up. I mean, even if they long-term continue to go up nominally, it won't be enough to offset the real fall in values. And I love this. There's a comment here. Beware the optimism of nominal price observations. Asking prices leap to near record high. Asking prices especially are just so fucking needless. UK house prices near peak, said The Guardian. They conceal a significant decline in real prices. And there's a graph showing how real values of house, just in the last, that's just to January 23, so that's 2 years, all right? And then down here, they make the comment that I really like. On the one hand, a slump in the housing market is a good thing. No one should mind if houses become more affordable. Even homeowners benefit. It becomes cheaper to buy a larger home, and your kids don't have to live with you into their 40s. However, there are 2 problems that a falling market exposes. The first is that housing isn't really becoming more affordable because the average wages haven't really increased since 2008. Yes. With no increase in our purchasing power, we've been unable to benefit even when prices have been stagnant. The other larger problem is that after decades of being told that rising nominal house prices are a good thing, many in the UK have followed this narrative, investing in the value of their home for other savings such as pensions. And a lot of those people, it goes on basically, read it for yourself, okay? You may be cruelly disappointed. This is exactly what Alex, Stiggy, and myself have been trying to communicate to people for all of those absolute infants House prices, you can't lose. Buy, borrow, buy to let, buy, borrow, pump it up. Financial freedom. Cruelly disappointed is probably the best non-offensive way to describe to what's going to happen to people who are relying on nominal house price increases for wealth. Sorry, guys. That ship has sailed and it ain't coming back for a very long time. That's why the whole buy-to-let sector is so valuable. I mean, listen, for switched-on, methodical, business-minded people who are buying rental properties with a long-term view and buying them with cash, yes. If you know what you're doing, you can still make a healthy return. But the amateur children who've been doing it and then just leveraged up to the hill, they're going to get such a rude shock. Right, next one. The EPC rating. This one is boring but important. So, a home with an EPC A rating is not necessarily net zero, which claims in a policy paper. So, I'm not going to go into this in detail, but too many EPCs do not provide an accurate assessment of the energy efficiency of a home. And I know that a lot of people, when they're looking for a home, do take this into account. So it's just important to not take the EPC as gospel, okay? It's don't pin your value of the home on the value on an EPC thing. Now I want to keep going. That's fact number 5. Fact number 6, bonus fact: probate delays. This is a Freedom of Information from HMRC has provided a 65% rise in year-long cases and even 2-year-long cases. I'm not going to read that article. It's just too dry and dull. But in a market where perhaps in some places house prices might be tanking, and when it comes to probate, of course, probate tends to be on larger, higher value properties where there is plenty of evidence to show that prices at that end of the market are coming down faster. These probate delays are causing serious destruction of the value of people's inheritance, because you can't sell a property until probate. When a property is being sold because someone's died, you can't sell it until probate has been granted. And if that's taking 1 to 2 years in a falling market, ow. So there's no, I'm not in any shape experienced when it comes to probate matters. But I'm going to be doing another conveyancing live stream at some point soon, and I do want to talk to the conveyancing lawyer Simon David about this to put a bit more flesh on the bones of the whole probate thing. But it's a nightmare, absolute nightmare. If I was selling a probate property now, well, you just don't want to be. It's not nice, not good. Right, okay, so let's go back to Julie Poole. Let's put her back up on the screen. And let's just pick this apart, because there really is some value in this, okay? Every single sentence in here, almost every sentence in here, is evidence of a buyer being unwittingly misled. I agreed to buy a house that 3 agents valued at $350,000. Agents don't value houses. It's so important you understand this. Agents put a figure on it that they think is what they need to make you instruct them to sell it. That it is not a valuation. And I have actual hard evidence of this right now here this morning. Okay, so I'm going to read you this. I'm actually going to put it on the screen. I'm going to put it on the screen. I'm going to get it off my phone, because this is absolutely pivotal to understanding this point. If you are a seller or a buyer, you need to understand this point. Oh, it's not going to work. Right. Okay, in a nutshell, this is a seller who went to talk to an agent and doesn't want to overvalue it, wants to sell a property, and he asked the agent, who was also an RICS surveyor, why should I pay for a RICS valuation when surely it would be the same as your estate agency valuation? The agent said no. Although it would be the same person, the free one would have an estate agency premium added to the value. What the fuck is that? Says this person in the message. Now, I have actually run this past another surveyor, a RICS, a registered valuer that I know, whose reaction was the same, WTF. The numbers that estate agents say that they think your home is worth has nothing to do with what your home is worth and everything to do with what they think you want to hear to instruct them. 90 to 95% of agents, this is the truth. The worst ones will overvalue deliberately and with impunity, and they know they're lying and they don't care. They just want you to sign up. And even the ones who are least comfortable with it are forced to play this game, because if they don't, they reluctantly tell you a number that you want to hear. They know it's not worth that, but they also know that if they don't tell you what you want to hear, Mr. and Mrs. Seller, you won't instruct them. And here we have it, right? Imagine if the seller had been told the truth by a good agent 5 months ago. It's worth 300,000. The sellers would have laughed them out of the room. 3 agents valued it. It doesn't matter if they're all overvaluing, right? Just remember this. Basically, all agents, with important small exceptions, all agents overvalue, either because they're choosing to as part of their strategy, or because they have no choice because they won't get a business without it and they're doing it reluctantly. But all agents are forced to overvalue because of sellers' expectations set by things as stupid as Rightmove's overpricing index. It's so stupid. That's point number one I wanted to break down, right? 3 agents valued at 350, implying, therefore, they must all have really believed that's what it was worth. No. 2 weeks ago, I bought for 330, which I am happy with. Why are you happy with it? Now, what I don't know, Julie, is whether you're a cash buyer or a mortgage buyer, right? But no, I do know, because you have a lender survey. So you're using a mortgage. In what world could you be happy with agreeing to pay a price that lenders are saying it's not worth that much? In what world would anyone be happy to do that? And so this is the other thing, right? This is the second point in the first sentence, which is worrying. There are buyers out there borrowing money to happily overpay, knowingly overpay. Your lender says it's worth 300 and you're happy to pay 10% over. I don't understand the psychology of that at all. So that's sentence number one. Two things in sentence number one. 3 agents valuing doesn't mean a thing because they all overvalue. You're happy to pay 330, but you haven't explained why. Mortgage valuation today at 300k. What does that tell you? These lenders, they want to lend. They want to lend, but they cannot lend on a property where they know there's no equity or buffer or security for them in it. Right? They cannot do that because it's too risky and they know the chances they're going to lose too much money if they do it. So they won't down value unless they really have to. My broker tells me that every valuation this week from every valuation from every lender, including high street lenders. Okay, no broker has access to every valuation from every lender. So your broker, if they said that, is, to put it kindly, exaggerating. But I don't disagree with what the message is, which is there's a lot of down valuing happening. But a broker saying that Because I suspect that broker may also have made you happy to pay 330,000, right? So the broker's covering their own arse, having also supported the agents. I'd love to know if this broker is actually an in-house broker from the agent. I'd really like to know that. So every lender, every valuation is coming in at 15 to 30. So that's 5 to 10% below agreed sale price. It's as if all the lenders have got together to undervalue, to drive prices down. Lenders are the last people on earth who want to drive prices down. There is absolutely no logic in all lenders wanting to drive prices down. Prices going down increases risks for lenders, reduces the value of their balance sheet, increases the ratio of liabilities to assets. It's bad, bad, bad. And there is no world in which all the lenders would get together to agree to drive prices down. 300k is ridiculous. Now, I wish I'd done this without putting a name up there, because I don't want to in any way embarrass Julie. But for a buyer, with all the information at hand that this buyer has, to be saying that to down value what I'm about to buy is ridiculous is proof, if it were needed, of how effective the gaslighting operation in the industry is. Because why else would a buyer feel like that? I am told there is a big risk to appeal, as it could go down even more. I don't know about that. Maybe, maybe not. But I am making an assumption here that the only reason Julie does not want this house to be downvalued is because the seller won't agree to the lower value, and therefore she won't be able to buy it. And this buyer is fixated on becoming an owner at any cost. I understand the reasons for that. You know, security. I understand the reasons for that. But it is deeply worrying how unaware of the financial risks she's talking about, assuming, right, paying £330,000 for a property that's worth 300 according to her bank, borrowing a mortgage to do that, and not understanding how that basically could almost immediately put her into negative equity in the theoretical situation to go ahead. So I actually replied to the comment and said, the seller will be crazy if they don't come down to the bank's valuation. What do you guys think? Yeah, Patricia says Julie can cough up the extra 330k if she wants. Bank valuations are at a point in time. I mean, I don't know whether they'd still go ahead. I don't know if that's true, Patricia, because I don't know if the banks would agree to take on. There's still a risk of default for them. It probably means they're going to reduce the amount that they're lending. You know. Vicky B says, I think she's already bought it. No, you can't have bought it if the bank is down valued at 300 unless you've re-agreed the price at 300. Yeah, she should walk away, says Car World. Buyer's market, not a seller's. I agree. I absolutely agree. Tina B says, I feel for Julie though. It's getting really boring waiting for agents and sellers to catch up with the lowering prices buyers can afford. Correct. Absolutely right. Andrew Overman. Sorry, you said you challenged that, Charlie. What would you challenge? Okay, you're an agent saying you've got no interest in overvaluing. Yes, okay. And so, Andrew, that would put you in the 5% of agents that I say don't overvalue, but really struggle against all the agents that are overvaluing. But there you said it. We are seeing some ridiculous valuations locally with agents stockpiling instructions, hiding behind 20-week contracts with 28-day notice periods, which is another 4 weeks, so 24-week contract, nearly 6 months. Imdadul Haq says, we've been waiting on a probate property for over a year now. Probate has been dragging on for 9 months. Yeah, very frustrating. Right, guys. I want to make one more comment and observation. So first of all, any of you who are new here, welcome to all new followers. I am not a mortgage broker, but I work with 2 brokers that I trust implicitly to look after anyone who wants to talk to an independent whole of market mortgage broker. And you can find them on my website. Pop your details in, they'll give you a call. Same with conveyancing, and same with property search packs that you need to buy when you have an offer accepted on a home. If you're using a mortgage, even if you're not, you should get a property search pack. But for reasons that continue to baffle me, I have quite a large investor community in my audience, people who are not buying or selling houses. And whilst they're not my target audience for this channel, they're very welcome here. And every now and then I make observations or comments that sort of trigger them. I'm like, I don't really care what you guys think. It's no consequence. My interest here is to make moving house easier, to get more transactions, to stop overvaluing it and everything else. And I referred to, and this is for any agents watching this, I referred to the forthcoming Best Agent Day on the 27th of June 2024, which is for estate agents. It's a live event for estate agents only to register. And it's a day that I think, if it goes as planned, will change the estate agency industry overnight, forever, in a way that most agents would like. And one of the ways of doing that will be ending overvaluing almost at a stroke. And I made a comment on X this morning saying that if the day goes, and it was just a throwaway comment, if the day goes as well as I think it's going to go, I'd be shorting Rightmove stock. Now that was just my way of saying I think Rightmove share price will come down after that day if that day goes as well. That's all I was saying. Oh my God, I triggered some investor type stock picking trading accounts who went for me. You can't say that. I can fucking say whatever I like. I can say oh, but somebody might go and short Rightmove because they don't know what they're doing because of what you said. Well, that's their fucking lookout. I have never and would never offer anything ever close to investment advice, but it is perfectly possible to offer an opinion, and it's an educated and informed. Someone else said, "Oh, Charlie, that's insider trading." No, it's not. It's not neither of these things. And so, unless there is a new law that I'm unaware of that means it's illegal to express opinions on stock prices, irresponsible was one word. Why? Someone might do it and lose money. Do you know what? There are people who are going to go out there and make trades, and some will buy, and some will make money, and some will lose money, no matter what I say. I just found it absolutely astonishing that anyone would mind about me just expressing an opinion on an area that I happen to know a bit about. Is anyone watching live now have an opinion, right? I'm right, okay, aren't I? I can say anything I like about my opinions on a stock price. What's going to happen? So am I shorting Rightmove stock? Do you know what? I wasn't planning to, and I wasn't thinking about doing it, and I don't really have. I'm pretty much fully committed everywhere that I could be committed. But this has almost made me want to actually do it. I don't know whether I've got the time to sort it out and the money. I don't know, but would I do it? Okay, let me put it this way: if I was an active, short-termist, highly speculative trader who understood the risks of derivatives and using derivatives and understood how to use derivatives, might I put on quite a complicated options-based trade on Rightmove's share price coming down? Yeah, I think I probably would. That's just me. I'm probably wrong. I could probably lose money on it. Doesn't mean anyone else should do it. That doesn't mean I can't say it. Um, well, I can tell you this. I can tell you this. What I don't know is I don't know to what extent Best Agent Day. I don't know exactly how far the reach will happen on that day. I know I'm teasing. I can't say anything else about it yet until I've got to put quite a lot more flesh on the bones, and I will talk about it a lot more soon. But I have been. I mean, it's literally 20 years of my life leading up to this day, because everyone in the industry is so fed up about everyone talking about improving the industry and nothing ever changing. The endless conferences, the endless debating and talking and waffle and crap, just like I do on these videos. But at industry events, which year in and year out happen, and nothing ever changes, right? It's like Groundhog Day. Rightmove will put its prices up again. Rightmove will keep over-reporting house prices by calling asking prices actual house prices. Agents will keep on overvaluing, and the agents overvaluing the most will keep winning the most business. And that has not changed for 30 years. And what I have done and what I have built is to create the ability and the facility for every agent in the country who wants to end that scenario to do so overnight. Overnight. I really mean it. And if that day works out as I'm planning it to and as I hope it will, it might fall flat on its face, right? But I am creating a way, without risking anything, that those majority of small agents that make up the estate agency industry, who are currently powerless to control their business or control their future and are being swept along by the agendas of vested interests and major corporate strategies and policies, I will be creating the ability for all of those agents to actually seize control of their business and their business's future once and for all. In a day. We'll see. BJ says, be careful, because if they could argue you did it maliciously and silence you, I have received countless threats of legal action from companies over the years who wanted to shut up. And every time it's happened, bar one, and I'll explain the reason why, I've gone, no, I'm not going to shut up. Don't threaten me. Put your fucking money where your mouth is and issue court proceedings against me for what you think I've done wrong. Because I haven't done anything wrong. I can say what I like. So I am very experienced at receiving legal threats. I had them from EasyJet, the Easy Group. I had a software product called Easy Match. And the Easy Group sent me a fucking doorstep from their lawyers about why I must change my company name and I must do this and I must do that, and if I don't, they're going to sue me. Blah, 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 blah. And of course, most people with that legal experience would go, okay, we'll change it. And I just replied and said, I don't think a judge would agree that my estate agency only CRM software could be confused with any of your consumer products. For that reason, I'm not going to change the name. Let me know what you think. Never heard from them again. So if you have done something knowingly bad and wrong and you get a legal threat about it, then that's a different situation. But when you haven't done anything wrong, don't be intimidated by just lawyers aren't judges. Remember that. Just remember that. Next time you get a threatening letter from a lawyer, remember, lawyers aren't judges. They don't decide. All they can do is threaten to take you to court to prove that you have somehow breached a regulation or a law. And they've got to prove it. Okay, so Purple Bricks tried to silence me. I got a doorstep from them saying, you've been saying stuff about Purple Bricks that's damaging us and we're going to sue you and your members and this and that and the other, blah, blah, blah. And I just went, I'm expressing an opinion that I can back up that hasn't actually cost you anything. So no, I'm going to keep on saying it. Come on, bring it. Nothing. They never did. And so just remember that 99 times out of 100, legal threats to shut you up are simply intimidation tactics, and there's no substance to it. You've got to know your bits about the law, and I've got in-house legal I have access to a huge amount of legal advice, and I always do check the position. But in the years of what I've been doing, I've learned the hard way about what. And the only time I ever did have back down was actually, it was a company that was later bought by Zoopla, and it was a big estate agency software company that sent me a massive threat to tell me to take down what I'd written all about their software and what was happening to their customers. And I was like, no. But I had investors then, and my investors said, no, you can't fight them. I said, look, but what I said is true. I can back it up. It's true. And it's important because estate agents are being fucked over by this software company. And it can't be allowed to be said. And the investors went, no, sorry, we just don't want to be involved in getting to court case, even if you're going to win it. And I was silenced by my partner investors. Well, I don't have any of those anymore. So nobody can shut me up. They can all go fuck themselves. Anyone that wants to bully me with legal threats, bring it on. Bring it on. Honestly, I will turn it into a PR advantage. Unless I have actually contravened a law or a regulation, that would be different. But to my knowledge, I haven't done that. That was a bit of a rant, wasn't it? Mr. President says, okay, so Mr. President, I don't know who you are, on X says, would it be better to assess the data as they emerge and then predict short, medium, and long-term trends and be prepared to review previous statements? Well, it's easy for anyone can do that. That's what everyone does. We just wait to see what comes out and then comment on it. Well, that's not insightful or helpful. What's insightful and helpful and valuable is to actually make observations about what you can see coming. You can't prove it because it's based on interpretation and extrapolation and projection of the trajectory that you can see everything happening, and it requires brains. And when you use your brains, people who don't have brains don't like it. They go, stop using your brains. You're making us look stupid, Charlie. We just like to stick to publishing verifiable facts, which no one can contravene. Oh, anyway, blah, blah, blah. I've gone on much too long. I can't believe there's that many of you listening to me ramble. Vicky B. Are you an agent, Vicky B? I hope you are. If you are an agent watching this, please, 27th of June, put it in your diary. You will be able to attend this function, this event from anywhere. So I want a minimum disruption to you. You will not have to travel. It will be completely live, completely private. Only verified agents will be able to attend. But not only is it free to attend, there will actually be best agent lead credits handed out to everyone who does attend, with multipliers and bonuses and various ways to reward you for your attendance. Lots more to come on that soon. Charlie Kramer, very funny. The thing about Jim Cramer that makes me laugh was what he said about Bear Stearns moments before they were liquidated back in 2008. Okay, PFL says, question, do you have a video for cash buyers and what should buyers be doing, saying when viewing? Okay, I've done lots of videos about what to be doing, saying and asking when on a viewing. I can't think of them off the top of my head. Just search my Moving Home with Charlie channel, go back and look for the first time for buyer advice and viewing advice. I have promised to do a cash buyer, so a draft offer letter for cash buyers and a video about being a cash buyer and making offers. I will do that soon, I promise you. But otherwise, guys, we're coming up on the hour. I've got lots more to do. Thank you for watching. And nobody that I can see has said that expressing an opinion on a stock price is illegal. Therefore, I will continue to do it. Yep. Thanks, guys. Oh, not an agent, says Vicky B, but glad Detail has been given a chance. Awesome, thank you. Yeah, that's it. I'm going to wrap up, guys. Find me on my website, mhwc.co.uk, or on the link below to my link tree, which has got links to all my socials platforms. And follow me on X if you want daily updates. and you want to engage with my debates about the housing market on a daily basis, it's moving_Charlie on Twitter or X. And for those of you who are missing Alex, Housing Stig, me too. I miss him a lot. We just haven't been able to get together recently, but I hope we will again soon. Thanks, guys. See you in the next one. Bye.